I feel like nobody wants to admit it. We've driven this economy off a cliff. There is literally no way out of this. It's about you taking care of you right now because this is all coming down. I figured on this quiet 4th of July long weekend that we should really address some very monumental, significant things that are playing out right now that nobody seems to have their eye on. A lot of people are not watching this the way that you're watching it, the way that we're seeing it. And we're seeing how it's all going to play out. We're going to talk about war, we're going to talk about some market indicators, and we're going to talk about the economic reality that we're all facing right now. Just before we talk about the broken stock market indicators and the economic reality, we got to talk about the big wild card in all of this, the most significant thing that's happening right now, and that has to do with all the wars that are brewing right now. Specifically, the one that's at the front of the line right now that you have to watch on that has the biggest potential to blow up into something much more significant is the war between Israel and Hezbollah. The Israel army has already drawn up plans for an invasion of southern Lebanon. They've already moved a whole bunch of troops out of Gaza up to the edge of the border with Lebanon. Israeli defense forces have always said that it's mandatory to go into Lebanon to deal with the terrorist issue between Hamas and Hezbollah and the Houthi rebels, all stemming from Iran. And in response to all of this, Hezbollah has threatened an incursion into Israel. Iran has said that all proxies will be involved, not just Hezbollah. If something breaks out, then you've got the Syrian rebel groups, you've got the Houthi rebels, you've got even Iran possibly getting involved. And people are treating this potential war with Hezbollah to be just simply kind of like the war with Gaza, with Hamas, only Hezbollah has more weapons and more troops and a stronger force. That's not it at all. People are not looking at it logarithmically. If there's an advance of this war into Lebanon against Hezbollah, the difference won't be just that Hezbollah is a tougher nut to crack than Hamas. It's not the same thing. It's a completely different horizon of events that are going to happen because of that. This brings everybody, including the United States, into the war almost immediately. Speaking of which, the U.S. has just positioned warships, the Wasp warship, right off the coast of Lebanon. The Wasp is a ship that is a rapid attack force ship, and it can also transport evacuees away from the area, shoot down missiles. It goes along with all the carrier groups that are being positioned as a deterrent for Hezbollah not to do anything untoward against Israel. We're already in the war. The war's already begun. There's shots going over the border from Lebanon and Israel back and forth every day. Meanwhile, the Houthi rebels in Yemen have attacked ships from the UK, Israel, America, in the Mediterranean, in the Arabian Sea, in the Indian Ocean, in the Red Sea, all of this over the last couple of days. The Houthis are really stepping up their activity levels. The amphibious assault ship USS Wasp entered the eastern Mediterranean Sea this week as the U.S. positions warships to try to keep fighting between Israel and Hezbollah in Lebanon from escalating into a wider war in the Middle East. Meanwhile, Canada, the Netherlands, Germany, North Macedonia, Sweden, Ireland, and now America are all warning their people to get out of Lebanon. Meanwhile, other countries have issued travel advisories against visiting Lebanon, and that includes Russia, France, US, Australia, Spain, and the UK. There's of course a massive likelihood that this war is going to break out. I've told you from October 8th that this war was going to break out. We've never gotten less close to war. It's just getting closer and closer. Things are ratcheting up. Even as we're speaking, there's probably strikes going against Israel and going against Hezbollah in Lebanon right now. What that does is it gives a risk premium and a war premium to a lot of assets like gold and oil. It's going to make some of these commodities increase in price for a sad reason, but it's going to happen. That's actually very directly connected to what I was thinking for an investment philosophy, where if you're a subscriber to peterleeds.com newsletter, you would have seen that I picked up 3 stocks recently, a couple of days ago. Part of that play was because all of this is breaking out now, as I've expected for a while, but it's becoming more common in people's mindsets. People are noticing it now. They're starting to realize, oh wait, this is actually going to happen. But the thing is, nobody's actually around right now. People are getting ready for barbecues or sit out in the sun. They're water skiing. Nothing wrong with that. I'm just saying there's not a lot of activity or eyeballs on some of these major, massive things that are all breaking out right now that you need to be prepared for to make sure you land on your feet. Help the people that you care about. Now I talk about the broken stock market indicators. A lot of people will say that debts don't matter. We can just print as much money as we need. And if debts don't matter, then why are we talking about it? We're talking about it because it does matter. And a lot of the fact that people are not understanding that debts do matter is why they're going to get blindsided. This is all coming together right now. It's about to break. For the stock market to keep on going or to not do what it's going to do, people need to believe there's a reason. They justify. They say, here's why debts don't matter. We can just print money. Here's why it's been so long since this is going to happen and it's never happened yet, so it's not going to happen. That's their thinking. Things like the Q ratio or the Buffett Indicator, they would have to do something that they've never done. They'd have to signal a warning that didn't then play out for the first time that that's ever happened. That would have to be the very first time that the Buffett Indicator was as high as it was without the eventual result being a massive stock market correction. Same thing with the Q ratio. Same thing with a lot of other indicators that we're going to talk about right now. The Buffett Indicator takes the total U.S. stock market value and divides that by the GDP. And the rate right now on the Buffett Indicator is 204.9. And every time it gets above 100, that's when you eventually see a massive stock market crash thereafter. The Q ratio is another one, taking the value of all the stocks compared to the value of all the assets of those stocks. Anytime it gets above 1.0, there's always a subsequent stock market crash. Like, I'm not talking 10%. I'm talking 80%, sometimes 60%, whatever. Right now it's at 1.78. That's a major warning sign. And just look at the low numbers here. 0.3. It gets up to above 1, comes right back down. Gets above 1, comes down. 1.8 comes down to 0.35. It got as high as 1.73, and it dropped down to 0.29. It takes a little while to do that, but the point is, for that decade, prices were just getting lower and lower and lower. People were getting squeezed more and more and more. Here's the dot-com bubble, 1.47. And then you remember what happened then, and it crashed all the way down here to below 1.0. And then more recently, it's gotten up to 1.80. It's crazy to think that we're not going to see the same thing that happens every single time. It's just a matter of timing. When does it happen? Does the market crash tomorrow, or does it crash over the next couple of years? So when you combine the wild card of the war, which who knows how that's all going to go, but it won't be good, and you take into account the fact that a lot of these major economic indicators will have to be absolutely broken and not work anymore for the stock market not to come down lower. Both of those factors lead into the third thing, which is the actual economic reality that I always talk about. And granted, there are some things that are going well for the economy right now, and some things that are going not well. Let's talk about it. Some people will point to low unemployment. Here's a screenshot of how low the unemployment rate is. That is subject to change as soon as we get into a recession, but I've told you that many times. A lot of people don't seem to realize that. And what else is doing well? Asset values. Here's how stocks have been doing. Here's real estate values. They've been going up. Cryptocurrencies. All this money got created, and then it pushed up a lot of assets. There's your inflation. And of course, manufacturing's doing well. You've got this trend of onshoring. Instead of sending all your manufacturing out to China or Laos or Mexico, do more of it in America. That is the beginning of how to get things back on track. Plus, you've got all the effect of artificial intelligence, which between you and I, there's a hazard here where people are being over exuberant. They're expecting it to change things too much. A company can take artificial intelligence, use it like a tool as a way to find better ways to make money, but it's still a company making money. And when they're making money that way, sometimes there's a lot of jobs that get wiped out. Artificial intelligence is replacing a lot of jobs. It's not making the economy stronger, it's making it weaker. But there are some winners, such as NVIDIA, that is the main artificial intelligence company right now. So it's doing well at a time where the overall economy is getting worse because of the technology. This is not the holy grail. People are treating it like that. They're getting over exuberant. If it has artificial intelligence in the name, they just buy the stock. We're using AI to yada, 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 and then they buy the stock. The stock goes up. The same thing happened with cryptocurrencies. When cryptocurrencies were big, a lot of companies would say, well, we used to be a silver mine. Now we're, yada yada, cryptocurrency in the title, and then all of a sudden the stock goes up because people are putting too much value in the concept because it's so new and they still don't realize that it's going to take a lot to actually squeeze the money out of that for the company, and it's going to be at the expense of other aspects of the economy at the same time. And though it didn't feel like it, that was the good things for the economy. Here's some of the bad ones that I watch. Take all the good ones and compare that, contrast that against this. Here's a chart of the debt load. We're just living off of debt. In America, the federal government, individuals, corporations. Here's the deficit, the balance of trade deficit. There's the operating deficit. Here's a screenshot of the purchasing power of the dollar over this time. Here's a screenshot of home affordability now. And let me tell you about the GDP, where a lot of it is fueled by government hiring and military spending, both of which you've had a tremendous amount of lately, and still, then we're going to be entering recessionary territory, either the next read or the one after that. You know that the recession's coming. You know when that happens that unemployment rates will increase, jobs will be more scarce, people will have less money to spend. You're actually already seeing this play out because some of the stuff I look at, instead of headline things that they talk about on the media, the president might mention job growth is good, unemployment rates are low. Yes, it's good, but you're cherry picking certain things. Let's look at something that really matters. Bankruptcies. Here's delinquencies and auto loans. And the coup de grace, here's the household debt levels. None of this is sustainable. I feel like nobody wants to admit it. We've driven this economy off a cliff. There is literally no way out of this. It's about you taking care of you right now because this is all coming down. It's going to be tough. You need to be preparing and getting set up now because once it all starts happening and everybody's aware of it, it'll be far too late. I just feel like we're at the turning of the tide right now with the economy, with the war, and all the things that I've been warning about for so long are all going to start showing up now together. They're going to feed off of each other. When real estate starts coming down, the wealth effect comes down. When cryptocurrencies come down, the wealth effect comes down. Stocks start coming down, wealth effect comes down. And when that happens, it's a steamroll. It's a domino effect. One thing will lead into the next thing, which will lead into the next thing. That's why I always say that when things come down, they come down together. As the wealth effect turns negative and everything goes from upward trajectory to lower trajectory, when that happens and everybody starts panicking, going, did anybody see this coming? You did, and you prepared ahead of time, right? You don't wait till the last minute. You don't wait till the fifth last minute. You just do it now. Do it now. Make sure to get invested in the right kinds of things, out of the really speculative stuff, the things that have gone for a run, in my opinion. I think that they're coming to the end of that reach. There isn't much further to go higher, but there's a lot further to go lower. You're going to want to keep an eye on all of this for your benefit. And the way to do that is to become a Peter Leeds insider. peterleeds.com/insiders. You get direct contact with me and I can walk you through all of this as it happens.